Welcome to another episode of Visions and Voices. I'm your host, John Stewart, partner at Armanino, leader of our family office industry nationwide here. But today I get the esteemed Michael Thrasher. We go back, we've been interacting for a while now, and I'm just so excited to have you here today. And we're flipping the script, right? I'm interviewing you. That is a very different way of doing this. Usually it's the other way. So, Michael, welcome. Why don't you introduce yourself to the audience?
Yeah, thanks so much. Thanks for having me. Yeah, it's funny that I've started an independent media company, but I've suddenly become like an interviewee more than I more than I have
Yeah, you're on the other
historically.
side of the
But
table for a little bit here, aren't you now? Yeah.
yeah, it's been fun though. So yeah, I'm a journalist based in New York City. I've been doing that for nearly a dozen years,
Mhm.
and I was most recently a full-time reporter at Institutional Investor magazine. And I spent most of my recent time there actually writing about asset managers and then portfolio construction and all kinds of sort of related stuff and
Right.
wherever else they would let me wander.
This wanders quite a bit. I agree. It's
Yeah.
it's an area you can do that with. Yeah.
Yes. Yeah. And it's and still very related to what I was doing. So I was writing about asset managers and then portfolio construction, like the biggest allocators, the public and corporate pensions, endowments,
Right.
foundations, etc. But not totally by design. I just kept crossing paths with people who were like going to work for a family office, or they were part of a formal or even just sort of an informal investment or advisory committee or group or
Right.
something like that. And out of just my own curiosity, I was just interested in what the offices were doing, because for some of them, it's like a pretty big, in terms of investment management, it's like a pretty big pool of assets and
Yeah, it's
capital.
not tiny. Yeah.
Yeah, not tiny, and but still quite different for so many reasons than some of the institutions and stuff that I had really been focused on. So I got to know some of them, and then realized that uh, there was this sort of void that they described. You know, they said unless you work for a big office and you're part of a huge investment staff that's run
Right.
really professionally, there's not. There's a lot of stuff for you, journalistically and otherwise. And if you're somebody who isn't, who's a singular person wearing a lot of hats, or you're sort of more typical private wealth manager or financial advisor, there's also a
Yeah.
lot of stuff for you. But if you're somebody like a family office that falls in that funny middle where
It's not
you're
covered. It's not really covered that well in my view. I can
yeah.
see why you. I mean, is that how you fell into covering it? You kind of found this. You kind of saw that gap essentially.
Exactly. Basically, those people said, there isn't a ton of stuff for me, at least consistently, or at least as good as what I expect, like from some other news publications that I read and newsletters and things like that. And so I thought that was crazy. I was like, well, there's a lot more offices. There are a lot more people employed by them. The orbit around them is expanding,
Right.
and I, and so that already is sort of intriguing as a journalist. And then when you also think about the aggregate pool of assets and the influence this group has in financial services and the industries where they're in many cases, right, still working, they have an operating company or companies and things like that. I just felt like that was odd. But I couldn't really, there was no way for me to easily sort of like quit my day job at the magazine and pursue this sort of hobby.
Right.
And
Right.
so
Yeah.
I
Yeah.
so I
You have
left
to
to
make it your
start.
main thing. Yeah. Yeah.
Exactly. So I left, and then late last year started Modus, which is an independent media company, and really at this moment a weekly newsletter explicitly for those folks, for family office professionals.
I mean, I know I can speak for myself and some others here at Armanino. Like we love it. I mean, we've always loved your work. We've always been admirers of the work, and you know that. But I think it's great that you're finding you see this vein. You know it needs this kind of coverage and insight to help, honestly, all of us in the industry learn, collaborate, network, grow, all those good things. And I think you're pinnacle. You're critical in the middle there, helping us do that. So I love it. I think it's great. You're out on your own. I think the newsletters have been great so far. So thank you for doing that.
Yeah, yeah, I'm happy to hear that. You never really know how something's going to go until you like actually until you're actually doing it,
Right.
and thankfully it's gone, I think, as well as I could have hoped, or better so far. And it's still barely, like, I don't know, 2 months, 60 days in, so that might change, but I don't think it will. Hopefully not.
No, no, that makes sense. So let's talk about that. So how is your perspective on, let's say, wealth and private capital and how it's managed. How's it changed since you started covering family offices? Like, what have you noticed evolve in your thinking over time?
Well, I hope this is maybe not as satisfying an answer as what you or listeners might like, but I've
Sure.
really only spent about, I'd say 18 months, maybe 2 years engaging with some of these folks any of them on any like meaningful level. So if you go
Sure.
back 2 years from now, a lot of the changes and things that they were doing were not really too different from many other investors because of interest rates and a coming election and all kinds of
Right.
things that they as investors like everybody else are thinking about. And I mean, one thing though that I've I don't know how much it's changed, but I've definitely appreciated, especially in the last couple of months, is I've like really been able to focus all my time talking to these folks. One
That's
of the
cool.
things that I've yeah, one of the things I've appreciated is that private capital is like the total wild west in terms of the check sizes that they're writing and how they're approaching their portfolio and what institutions they're engaging with. I mean, I think
Does
everybody
that make it a
you
challenge covering it because it is so kind of like it's not hidden necessarily, but it's not easy to go. It's opaque, right? Like
yeah,
it's not transparent like a publicly traded company or something. So
yeah, totally. You guys probably also experienced this, which is like, everybody, no, I shouldn't say everybody, a lot of people talk about family offices as this singular investor
right.
group, but
But
there's
it's
actually
really not like
so
that
many.
anymore.
No, it's not like that. There's actually like a few pretty defined, and you could probably slice and dice it a little bit more. There's at least like a few sort of like defined segments within this group. And so that's what I've sort of come to appreciate. And dependent, you asked me that question, and my gut is actually to ask you, like, well, what segment do you want me to talk about? Because that's really that's actually maybe like a more worthwhile answer. Otherwise, broadly, like I said, they're in some ways
Yeah.
not too different. They have the
Well,
same
break it down. What's
anxieties
the
as
segment that
other things.
fascinates you the most right now? Like let's go with what you're finding to be most insightful. Let's talk about that.
Yeah. So I maybe have a different answer than most people. I think most people are really interested in. I mean, I am also interested in this group. There's a not a terribly long list, but a long enough one and a growing one of really big offices that are managing their their portfolios like in a
Yeah,
pretty
hundreds of
sophisticated
billions of
fashion.
dollars. Yeah.
Yes, I mean it goes all the way up, but like I mean
Right.
even if you're talking about people just north of just all the numbers sound when you're talking about family
All these
offices,
numbers are crazy to you and I, but
all
yeah.
the numbers sound absurd when you're talking about family offices, or often do. Even when you're talking about offices with 2 5 or like beyond 10 billion, there's actually like more of those people than you think.
Oh, 100. What I tell prospective clients all the time is like, this is a wide band, right? The normal curve here has really far reaching tails. Now,
Exactly.
yes, you're gonna have those high end ultra billionaires, ultra high net worth. Got it. Yep, those are huge and big. But you're also gonna have a long tail of all these 50 plus millionaires, right? 50 million plus, but there's thousands of them.
Right.
Yeah.
Exactly. So those folks, if you've got a portfolio of like 10 billion investable assets, you've got a little bit of resources. So they
Right.
they can do some really interesting things, and that other even one or even $1 billion family office like might not want to do, or necessarily, or they're just going to
Yeah,
choose
they're
to do
gonna
something
look
else with their resources.
because I'm kind of finding, and I'm curious your take on this. I'm kind of finding that the bigger ones are acting closer to pseudo PE institutional investors in ways because they are big enough to have that clout to look at it. I mean, not totally, right? Because they still do different things, but and then those smaller ones really kind of are acting more like the mid-market guys. They're looking at different level size deals to kind of help that part of the economy in ways in terms of what investing to them means. But what's your take on that? Because that's just my simple view of looking at it from here, but you may see different things.
Yeah. So we're coming full circle. It's funny. I was like, okay, this is like we sort of started with this group, which a lot of people focus on, even though I don't necessarily think it's always the most interesting, or it's interesting for different reasons.
Right.
I mean, they are. You're right. They're even like the biggest offices, though. I always try to zoom out. Like as a journalist, I'm always trying to sort of like zoom in and out on something, and really sort of suss out like context that's just valuable for me, my own understanding. and or something that needs to like be in writing next to something, right? That I'm
Right. No, of
reporting.
course. Yeah. Yeah.
Yeah.
Yeah.
And like even those biggest offices, there is a very, very, very short list of them that are truly going toe to toe, like with private equity firms and are trying to like acquire companies outright. That's not really like activity that's representative
Yeah. That's a very
across
rare
like,
vehicle
yeah, that's
right
a very
now.
unusual
Yeah.
thing. That's a very unusual thing. And even some of that list, like these are people that actually like have an asset management business. So it might be largely
And we're
family
seeing that. We're
capital, but
seeing
it's a
family
GP.
offices gobble up small RIAs, if you will, to have
Yeah.
like it's a very interesting. Like I just saw one happen in Philadelphia. There's been one out in the Pacific Northwest. They're gathering up small RIAs to kind of become their investment arm.
Yeah, yeah, totally. Yeah, they're doing this for like all kinds of reasons. And I mean, like those businesses are like they have super sticky clients with
Yeah.
really nice cash flows. They're like
Low
if they're
turnover, nice cash
low
flow.
turn,
Yep.
yeah, like if they're run really well, they're like quite profitable. And if you're a family office, they're the
And
owners of
it
those
ticks all your
businesses, they
boxes,
like
really. Yeah.
yeah, it checks all your boxes for like the family office, and also oftentimes and increasingly, I think the sellers are acknowledging that. So there's all kinds of that's just wealth management. There's other types of businesses that like them, even if they aren't getting quite the multiple for like some slice or all of the businesses that they're selling
Yeah.
or
No,
whatever.
that's
So there's
that's
there's
fair.
there's all that activity, but I actually personally think like one of the most interesting sort of segments within the group is like that kind of funny middle where it's an office, it's call it a couple 100 million up to like 1 billion, and
Mhm.
they sort of, this is probably an oversimplification, but I always say like these really aren't any different than most small businesses. Like think
No,
of
they're
like a
really
really
not.
just
I
think of like
agree.
a really successful small business. Like
Yep.
they've got, it's going well, and it had and it's employed some people that are pretty sharp. They're probably good at what they do, or hopefully they have some resources, but they don't have unlimited resources,
Right.
and there's still just not that many people. And so they're the biggest constraint, the biggest thing they're thinking about is how do we really best spend our time. There's only so many hours in the day, and if you only employ 10 or fewer
That's the
people,
one thing they can't buy.
what are those people going to
Right.
be doing?
Yeah, they
Exactly.
can't buy more time. They can buy a lot of things, but they can't buy more time.
Yeah. And if you talk to the principal or family members who I unless they're involved in the day-to-day of the office, I don't have nearly as much engagement. I don't engage with them nearly as much as I think some people think I do. I'm really engaged with people that are like running the
Right, more the
offices.
operators. Right. Yeah.
Exactly. And they there's, depending on the wills and wishes and the objective, like why does this office exist in the first place, like what their data, what that team looks like, and who the people are, and what they're worried about, what their biggest headaches are. It actually could be quite different office to office. So that's like the really interesting place where there's like a million rabbit holes you
Yeah,
could
because
stumble
they're
into.
different flavor. Well, let me ask this. I'm curious, like, do you ever get any pushback or resistance when you're trying to report on certain topics when you're talking to one of them? Like, what's it like when you engage with one of, let's call it that mid-market, that mid-band family office? Do you get any pushback, resistance, or are they really excited to kind of share what they're working on? Like, or do you see a mixture of both, and how do you handle that?
It's a mixture of both, and this actually isn't super unique to family offices. This is like for every journalist, no matter what you're covering.
Yeah, that's what I was curious. I
There,
mean, every journalist has to hit up against some resistance, I would assume. So yeah, how do you handle that? Like, walk me through it. It'd be fun to know.
yeah, yeah. Maybe a good place to start is that a lot of journalism falls into two buckets. And I think the best organizations are doing both of these things. They're doing what people care the most about, and like the primary purpose of journalism, good independent journalism, which is accountability. And then next to that, what a lot of news publications are also doing is like I guess what I'd call the sort of curiosity bucket. And you're pretty hard, the accountability stuff comes and goes. You never really know when there's going to be a need and opportunity, and when you're going to, as the journalist, be able to execute on that, right? Like that's
Sure.
just this thing that you're sort of working on a rolling basis, and sometimes it's very fruitful, and sometimes it isn't. The curiosity bucket is like much easier to fill, if for no other reason than especially if they're professionals, like family, like the people working at family offices that feel sort of isolated from others that are doing similar things. They're very eager to talk. In many cases, I should say, they're pretty
Right.
eager to talk not everyone, and just explain even off the record, like what it is that they're working on, what's their biggest challenge, what are their biggest worries. And also, like, those are some, like, oftentimes sort of negative things, but also like what they're most excited about. And
Yeah.
then they want to know, like, what other do other people have the same feelings about these things?
Because
And
I
even
think
if they
that's a
don't, it might be
key,
interesting.
you're a key vehicle there because it's a very interesting segment where yes, it's sticky internally. You can network amongst others, but it's really hard sometimes to get a beat on what everybody's really doing because it is such a dispersed industry that doesn't have a natural mixing point necessarily, right? So like you kind of get to play that liaison in ways, I would think.
Yeah, totally. I think, I mean, this is the most fun thing about journalism. I would say if someone wants to be a writer, like, you should just try to be a writer, or do that or do that on the side. Like, journalism's like 90+% talking to people and networking and approaching everyone and everything that you can with, like, genuine lack of assumption and curiosity, and then distilling what's newsworthy, interesting, and important, and thoughtfully packaging that in some capacity, be it a newsletter or an article or both or a podcast or whatever, for people that want that thing. This
Right.
is all that it is, right? And that's, if you're somebody that just likes to continuously learn, journalism is, like, by far the greatest job in the world.
It seems like
And
every
then,
conversation would be absolutely different than the previous one, so you're going to keep learning the whole time, I would assume.
yeah, I mean, yes and no, right?
Oh, okay.
I think
Tell me
one of the
more
things,
here. Let's go.
yeah, when I started, and when I started writing about family offices, one of the things I just kept hearing people repeat is, like, that adage was just like, oh, if you've seen one family office, you've only seen one family office. And I'm just like,
Everybody
that just,
loves to
like,
say that.
isn't,
Yep.
people love to say that. And it's just, like, not true. It's just
Yeah.
not. I just, like,
They're
if
more
that was
similar than
true,
they are different.
they're
Yeah.
far more similar than people realize. I mean, they're inherently unique because they are an extension of a family. The investment management, all the things that people are most often talking about, or, and people like me, you're also talking to people about. Like, this is just an extension of. It's inseparable from all the other stuff that the office does, and so
Right.
it's inherently going to be unique because of the principal or family members or whoever, and the people working there. But at the end of the day, like, they have those just small, they just
But
have,
that's on
like,
the
those small
margins.
business
Yeah.
problems. Yeah.
I agree. Like, 80% of it's similar. Maybe there's that 20% or whatever that right percentage is. Okay, that's where they differ on the edges, but generally it's the same kind of vehicle, at least in the way that maybe you and I and other professionals will look at it.
Yeah.
And they're generally the same for the most of it. And then, of course, there's differences on the edges. Got it. They all have their own little ways, but that doesn't mean the majority of it's not the same kind of vehicle in the way it runs.
Exactly. Yeah. So, and I mean, those are a lot of, like, tough decisions, and good reporting consistently can help people at least give them some direction, inform the questions that they're asking, and figure
Yeah.
that stuff out. I think there's a lot of people that do other types of stories in journalism exceptionally well that, like, I just don't think Modus is going to compete with. Like, Modus is never going to be it is a business public it is a business publication for these working professionals in finance that just happen to
Right.
be, and others, but happen to be working in a family office instead of some other institution.
Right.
But, like, Modus will never be Arc Digest going to tour someone's home or something. I'm not
Yeah,
terribly
that's not what you're
interested in,
trying
like,
to expose
yeah,
here or
I'm not
showcase. Yeah.
I'm not terribly interested in a lot of the intra-family drama, or who has the longest yacht or whatever. Like, this is
Yeah,
pretty
and that's
narrowly
not insightful to
focused.
your audience either. Like we understand those are things, but that's not really what we're all tuning in for.
Exactly. Yeah. So that it makes it easy, and once you have that focus, it's actually pretty. I haven't found it difficult to accumulate. I mean, my list of ideas and things that I want to write about that I know these people are interested in is growing exponentially faster than what I can squeeze into a weekly email while running a small
So
business.
let's
So
double
so
click on that. So what is some of the more, let's say, more surprising or unexpected stories that you have on that list that you're going to write that are coming up now as you cover the industry? What are some of those more surprising elements that have come up?
I would.
Spill some tea here for us, man. Give us some insight.
Yeah. Okay. I'm going to answer that this way.
Yeah, yeah.
I Yeah, I think if I described some of the service providers who are not necessarily exclusively focused on family offices, but are really, really meaningful parts of this ecosystem and the supporting infrastructure for these offices,
Sure.
I think if you sort of just like sort of white labeled that, and I just sort of described some of these companies to most, at least like some like journalists, some of my peers, and then I told you that, like, there hasn't really been like much journalism about that company, or that, like there's been like 2 articles in a couple of years. A lot of people knowing knowing about some of the companies would be like, well, that's insane. That doesn't make it, that's if this is so important to this group of investors with this aggregate pool of assets and this level of influence, and they are wondering about these companies, service providers or whatever, how's it possible that somebody isn't doing more of that journalism? And to that, I would say this is like a big reason why Modus exists,
I think it's
because
fair. Yeah, the demand's there, but I don't
yeah,
know that, that there's enough coverage on it. And then you're, I might one of the earliest and first to do it, and you're doing it really well. Yeah, I'm curious what that journey is for you when you engage. Like, what are any unexpected topics that have come up so far in this journey with Modus that you're like, oh wow, I'm going to cover that. And I didn't think I'd be covering that.
yeah, maybe when I was answering that, I didn't articulate this well or explicitly enough. But I think a lot of those companies are a little surprised that a journalist is showing up and asking about their growth and their
Right.
ownership and their performance and about their product roadmap and all kinds of things that their users want to know.
But
And
they're
they
not used
like,
to anybody really
and they're
covering it.
not,
So,
yeah, they're
right.
used to sending out, like updates and quarterly
Like
things to their
curated
customers
press
or
release, but
prospective
that's
ones.
not journalism. Right. Yeah.
Right, exactly.
Right.
They're not, a lot of people are not used. It's just, and that's not to say that they feel any certain way about it. Actually, I think a
Sure.
lot of people are actually like far more people are excited that somebody is calling and asking questions that they might not even realize
That's how
they.
my response would have been too. Is like,
Yeah,
oh, thankfully someone's going to start to shine some light on this because then we're all going to, rising tide rises all boats type of thing. You're helping rise that tide. It allows us to have more clarity on what people are doing, what they need, what they don't need, et cetera, et cetera, et cetera. So that makes sense to me, that reaction. I would have it too.
yeah, and they do. There's actually like quite a lot of good like newsletters, podcasts, and people on
You're
social
on the best
media.
one right now. Let's be clear. You're on the
I
best
that's
one right now.
nice, that's nice of you to say, but it is a lot of those things are adjacent to like some other core business or with something else that
Right.
someone does, and that's not to say it's any less valuable, but it is different than independent journalism. Like I will always be able to go places and ask questions and write things that they're just not going to be there. There isn't going to be the same willingness to do. And I think, frankly, like skill set, like journalism is,
There's an element of
it.
trust there that you're the right person for them to talk to because they understand how you're going to handle it, right? I would assume
Yes,
that.
I think. Yeah, there's like three. There's like a few things that really differentiate and make journalists successful in what they do, engaging, and that's just like can they be trusted is one, which takes a long time to prove to people and do. There's just also what am I trying to say here? There's I mean, journalists acknowledge this all the time amongst themselves, or amongst each other, which is like people. There's sort of skill sets within this craft, and
Right.
so like there's a reason why certain people sort of gravitate toward and then end up writing certain kinds of stories. It's because they've handled that thoughtfully and carefully, and I think that is a skill that people who aren't doing that, and especially haven't worked with like editors previously that can help them do that.
That's
That
fair.
that's it's
Yeah.
just too big. It's just too heavy a lift, and the if you aren't, the journal so much of journalism is like good operational excellence. Like novel ideas and like knowing what people are interested in is not like that gets like most of the way there, but the differentiation happens in like the last mile of the delivery, right? Like
The
everybody
rest is like table
everybody
stakes, huh? Okay,
everybody
that
can
makes
get
sense.
to like the end of the block, but like who can actually get there, like, and deliver something that's worthwhile first, and then is better, is like where that's like oftentimes the difference between success and not. And those are just things that like if you're doing like content and stuff on the side, you just like don't have time to be like thinking that
Right.
deeply about so many things.
You're not
Your
going to that
chance of
level of
success
depth
is
of
much
insight.
lower. So you can do
Right.
something really valuable and really great and get most of the way there. But like that last little bit is like frankly like the responsibility of the news organization. That's where
Right.
you make or break.
That's interesting. So let's we'll go towards that vein of that differentiation and where you're starting to see things. And let's talk, and you know this is near dear to me, technology and innovation in the space. You know how much I care about that. What do you see as you're interviewing and as you're meeting folks and as you're going through this with Modus? What do you see how do you see technology forming the way family offices are going to operate? Like, I have my view on this, and you know that, but I want to hear yours.
Yeah,
Or what kind of things are you noticing? Yeah, I'm just curious because I'm
yeah,
sure it's coming up in conversation.
yeah. I think that our again, like they're not totally different than like small businesses.
I know,
they're very budget conscious. So
right? They want efficiency tools. They want all these. Yeah, I get
right,
it.
they want to improve their efficiency, but that can't but they don't necessarily want to pay more for that efficiency unless they really feel like it's worth it, right? You know, like it can't be efficiency for efficiency's sake. And
No, it has to be
if
the quality and
somebody
value.
fat
Yeah,
fingering Excel has worked for 20 years,
not gonna do it.
that's gonna it could be a difficult thing to change, right? Like humans are creatures of habit. I mean, I just know this about myself.
We hate change.
There's nothing worse than like starting a new job and going from like Outlook to Gmail again or to Outlook again.
Oh yeah, when
Just
you
because
switch
you like
across
get in
those
the
platforms, oh, yeah,
yes, when you
it
switch,
messes with
which
your
is what
brain.
that sounds like such a silly, dumb thing, but like everyone, maybe not everybody, but like many people know exactly like that pain. And it's
Hmm.
not terribly difficult, but it's just an annoying it's just an annoying adjustment. And like the same is for any technology or anything that you're using. And like some offices, they've got so many other things to worry about that even just sort of exploring if like the cost or just purely the headache of the change is going to be worth it
Yeah.
is like too far down the list for them. So there's
Yeah, they're
like that
like, we're
whole
not even
group.
at that pace. We're not even
We're not
close.
even there. We're not even at this
Yeah.
moment to like make to even explore that. And then there's like everybody in that middle ground who's like, all right, well, we've got some time, we got some resources. Is this going to actually move the needle for us, especially if it's going to cost us more?
Right. Is there
And then
value
there's
there? Yeah.
yeah, exactly. So everybody's doing that, with through the lens of like their own organization. Like if you've got right, like if it's an office that's really investment focused, and the software and things that you're doing and who you're engaging is so different than like an office that's like somebody that sort of has like OCIO to the portfolio, but it's
Right.
managing like basically doing managing the distributions for like 100 beneficiaries of this huge pool of wealth and all the stuff,
Yeah,
and
you're
it's
going
like
to need
100
good tech
households
to
or
get
something
you through that
crazy.
because that's a
Yeah,
large list of things. Right. Yeah.
exactly. Yeah, like
Unusual.
totally different areas of focus oftentimes, and like
And
when
this
you're
is where
doing
they differ. To your point earlier, this is where we're getting into a detail here where the family offices do differ how they operate because it depends on that size and responsibility versus where they sit and what they need.
yeah, yeah, totally. Yeah, I mean it's like so many other businesses. It's like if you just sort of know how big the thing is, that that it sort of gives you like some direction about what it is,
Yeah.
about it, but like you really have to like go under the hood and be like, oh, this is like actually more interesting, or maybe
I
just
think
like
one thing
not,
I
or in a
found
good way, not
fascinating.
as interesting as you think it might be.
Right, right. I think one thing I've been fascinated about it, or at least encouraged about, is how family offices in industry. Let's aggregate here and be very generic, but they're leaning harder into new tech like AI and automation versus what I would say other traditional industries are sitting back and maybe not sure. Again, at the aggregate level, not at individual level, but I'm seeing a higher propensity to adopt the AI with a family office segment than I am in other places. So I'm curious if you're seeing the same thing in your conversations. That's what my experience has been, I'd say over the past 12 months or so.
Yeah, I don't, I guess I can really like only say this anecdotally, John. I don't think I have a good answer to that question, but my gut tells me that this might be the case just because they are small and they are like by nature more adaptable. Like think about the
Yeah, that's what it
adoption.
feels like.
Like
Yeah.
think about like when you and I started fussing around with Chat GPT
Yeah.
versus the timeline for companies creating the in-house sandbox and actually starting to like
Yeah,
implement
these offices
some
are
of
more
those
nimble.
tools.
They're able to attack it faster. So if they do want to go after it, they're able to do it.
Yeah, exactly. Like it might not be easy, but like the approval process is not, if you think you can execute and implement that stuff, like the approval process, like in theory shouldn't be that long.
Yeah,
There's
it's really
like
not.
five
Yeah.
people that have to agree to that, and like only
Yeah,
two of
it's
them are
not
like the
a
actual
Fortune
decision
100
makers.
company. Yeah.
Exactly. It's not
Yeah.
like a 12 months long thing that like 100 people have
Yeah,
to
I got to
meet
go to
about
the
a thousand
board. I got to go to
times.
this. I got to get this guy in. Yeah, it's not
Exactly. Yeah.
that politicking doesn't exist necessarily.
Right. So I guess when if that's what you're experiencing, I can't like speak to that necessarily directly, but it doesn't surprise me. I certainly
Fair.
believe that, I guess.
Yeah. Well, then we'll back out further then for a second. So what do you think some of the most common or misunderstood or misconceptions the public or the audience may have of what a family office really is? Do you think like I think as we're getting closer and more people cover the space like you and more people we're all learning, people are learning what it really is. It's becoming a more popular thing to talk about. Do you think there's anything misunderstood or any misconceptions that you're like, oh yeah, people think this, but it's not really what they do?
Yeah, I would say that even though we feel like more and more people are talking about family offices, especially in like financial services,
Yeah, I mean, we're a little
um,
myopic in our world here.
yes, totally. I mean, many or most of my friends don't work
Yeah,
in
no, I usually have to explain what it
journalism
is.
or financial services. So, when
Yeah.
I told them I was starting a company and the thing that I was going to be doing was writing a newsletter for professionals working for family offices, they were like, "What?"
What?
Yeah. Uh,
Exactly. What
yeah,
again?
and then I
No.
think when you explain, like, there are people who are so wealthy and their lives reach some level of complexity that they at least think, if not literally are, better off employing some people to work exclusively for them and organizing some of this a little bit differently than just giving somebody else all that responsibility. They immediately think of like the richest, call it like 10 people in the world who, for a variety of
Right.
reasons, are
But
always on
that's
the
at the
front
other end of the
page.
tail. That is not necessarily a whole
Exactly.
segment. Right.
Exactly. So even if they understand or have heard of a family office or whatever, the individuals and offices that they might be thinking about
Right.
are not really like representative of the of the group, right? And I think to a degree, like even this is, I think, one of the other reasons it's just so like journalistically interesting to me is that there's just not a ton of like spectacular data because so many of these offices are so sort of amorphous. Like there is not like
Yeah.
the whatever LLC with a website and
Most
a
don't even have
staff page.
websites, right? You can't
No,
like
there's
just
no
go
website.
Google these guys. Yeah.
It's not even formalized in the sense like this is just a group sitting inside the family's operating company.
Yeah, that could be
And
what
it's
it is,
it's
right?
just in name only the family
Yeah.
office, but like these employees are sort of straddling. They're doing a lot of things for the family and the owners and the leadership. So how do is that? I think a lot of people would be like, well, that's just a big family business, and a bunch of people would be like, well, no, it's a family office, and it's like, no, it's all kind of the same.
Yeah,
It's
and you have to really get used to this segment to understand the differentiation, the variations there, right? Because otherwise, you're right.
right.
People gloss over it and they label it something. You're like, well, you missed something there. There's a little bit
Yeah,
more going on beneath the surface than you think.
yeah. I think there's actually probably a ton of people who they themselves actually like have a family office and they don't even know it. They're like,
That's
oh, we
probably a
employ.
really good point, actually. I think you're probably 100% right with that. Yeah.
Yeah, it's like we employ a few people, and like because our we've got so many entities or companies and all these things, and it was just the accounting firm was charging us so much just to make it easier. We hired the guy to do it for us, and then we're
Right.
like, yeah, well, and then we hired someone else to manage our. We have a lot of, I don't know, whatever, theoretical. We have a bunch of we own a bunch of real estate for whatever reason,
Sure. Yeah, which is a very
and we
popular
needed
thing.
somebody, yeah, very popular thing, and like we needed someone. We can't be fussing around with 20 things in 10 different states, also abroad. Like someone has to be responsible for all
Yeah,
that.
I mean, I
And
look
then
at it
you
as it's
yeah
how they optimize their time, the time
yeah
value of their money in a way. I mean, I'm stealing that, I'm punning a little here, but yeah,
yeah yeah
like how do they optimize their time with their wealth? Because that's what they can't get back. So having a formal family office or whatever they want to call it enables them to do that essentially.
yeah, exactly. And like I'm sure, like I said, like, I think there's people out there who
They're like,
especially
oh,
if they aren't.
I'm not in that bucket. And you're like, wait, yeah, you are.
Yes, yeah, I'm sure there's definitely a bunch of those people, especially if they haven't like sold their operating company. They're not really focused on like those day to day of like those employees as much.
Right.
They're really focused on like running their business and all the other stuff. And this is just like people they employed to help them full time instead of like farming it out to someone. And like they would be like, I'm sure there's some people who'd be like, oh, I don't have a family office, and I'd be like, well, you kind of do, you know.
You kind of do. Yeah, I do think it's misunderstood in that regard, even with the wealth owners. They don't even notice. I find in more recently in our work here that education is almost the first step of explaining why it's even a term and why it matters. And that wealth owners are often like, oh, I didn't realize that's really what these things were supposed to do or help or can help with. It's a little demystifying because yeah, they do think of these big guys, and you're like, well, yeah, those guys do very different things. We call it all a family office, but those big ones operate very differently, and you kind of have to reposition it to them in ways.
Yeah. I also there's like a whole other segment of family offices, I think like across sizes
Okay.
that's like just sort of like the unnecessary like approaching vanity level thing. You know,
Yeah.
like I mean like, I understand how this happens because I just personally am somebody who like I don't like I mean I like to vacation, but like I don't vacation well. Like I just can't. I can only do like so many days in a row on the beach
Yeah,
or
and then you're like,
something
I got to do
before
something else.
I got to
Right.
do something. And I like I don't really golf. I don't, you know, like I'm gonna be probably doing some version of what I'm doing now, like effectively until I die.
I-
And like there's probably a ton of
Morbid, but
other
I'm with you. Okay.
yeah, yeah. I mean, kind of a morbid way to place to
Yeah.
take this, but like, so I mean, and there's so many people that are like this. Like, I mean, how many people have you met
Right.
that like retire and like less than a year later they're like working or doing something again?
Retirement to me just means you're shifting to do other things. I mean,
Yeah,
who
yeah,
sits back and
totally.
doesn't do anything? I don't think that's, I think that was several generations ago. That was the vision of retirement. I don't think that's how that works now.
Yeah,
And
exactly. So
yeah,
if you're somebody that like sells your operating company and still
you
has,
still have life
especially
in
if you're,
front of
yeah,
you.
you still have like, especially if you still have a lot of life in front of you, like, and you're you're fantastically wealthy and you want to like do some things and be involved more directly. I mean, a good way
Yeah.
to do that might be to start a family office. And like, is
Yeah.
it going to be like the most efficiently is was this thing necessary? I don't know, but like, did that person want it? Can they afford it? Is it fulfilling? Well, if you check all those boxes, like who am I to say it was a bad idea? I don't know.
Yeah, who are we to judge? Because it's really how it's really more of a life vehicle and it's how they want to kind of joke, like, it's how do you want to spend your time and allocate your wealth? That's really what they're solving for. And and it's a vehicle that helps you do that, I guess. It doesn't have to be there, but it certainly is
Yeah,
beneficial if you have a vision and plans, it helps you.
yeah,
Okay, so
totally.
let's go into predictions time. All right, predictions. All right.
Okay,
Forecasting here. We're going to come back a year later and see if you got it right. All right. I'll try to remember to do that, by the way, but let's pretend we're going to do that.
okay.
So, if you had to predict one major shift in the industry over the next, let's say, 5 years, right? What would it be? What do you see as that one? What would be one? Or if you have a couple, that's fine too. But like, what do you see as a major shift next 5 years, family office industry? What do you predict?
I think, oh man, I there's going to be more of them because
I think that's fair. This is going to grow exponentially. The wealth transfer in across the world is going to dictate, you go from one wealth owner who had 4 kids, all of a sudden you now have 5 family offices, right? So it just expands.
yeah, although John, I would actually argue that that won't be actually the core driver of the growth because so much of that wealth gets so dissipated
It really
over
does.
into
They
the
start
next
to spread it out.
generation.
It becomes its own little thing, and yeah.
The other thing about the generational wealth transfer is that much of that is going to turn over, and everyone knows the stats about like the what percent of inheritors switch financial advisors and institutions,
Yeah,
like
you
north
can
of
look up all
75%
this.
or
We all
something.
know
Yeah,
how
there's
it
all kind.
works. Yeah.
Everybody knows how that works, but one thing
Yeah.
that I think is I don't know exactly what this is. This is sort of like one of the things on my to-do list actually at Modus is to
Sure.
like at least explore this or try to figure this out. Is like, okay, if there's like that round number, 100 trillion getting transferred over how many over the coming decades that everybody talks about, like,
Yep.
family offices collectively are in the 5, 6, beyond trillion range. And
Hmm.
so much of that money is like basically already spoken for in the form of their
Yeah,
structures and, so,
it's already been
so
allocated. Yeah.
yes, exactly. So, and like everybody knows, you could be 3 generations deep and everybody has some sense of how those assets are going to be managed and how they're going to be distributed. And so, I don't know, I would like cleave off like, I don't know, 5 or maybe it's like greater percent of that 100 trillion or whatever number you want to assign to that
Yeah.
transfer. There is like some little sliver of that is like shockingly concentrated to like a small number of families that is
Yeah.
already like kind of it's already on a path for it in a way. So that's like just something. Maybe it's I don't know how newsletter worthy that topic is or not, but I think it's interesting. And so
That
I,
is,
I think
well, this,
for
you poses
family
an interesting
offices,
question. How much of that wealth is still in a position to be allocated to new ideas versus things that are already going to be baked in? And I mean, I think you are hitting on something. Like, if you look at it from a mega macro level, I mean, that's interesting.
yeah, and so like the family offices, like a lot of that, they're I think a lot of that sort of over the generation stuff has
And the
already
proliferation of it, because when you expand to G2 or G3, you're talking about many more people being involved now. So now there's
exactly,
more
yeah, yeah.
opinions, there's more drivers, there's more things that want to do, where it may have started with 1 or 2 people, but now you get 20 people involved. So
Yeah, exactly. So that I think, I mean, there will be some of that, and it will, like you suggested, that will be a factor in the growth. But I think that the biggest driver of growth and like the creation of the office is just like the the wealthiest countries, especially the U.S. and China, especially less so now. The places that are growing, they're just minting wealthy people.
yeah,
I mean, there are just many, many more.
there
There's just
ever were.
many, many
So
more
yeah.
people that are worth $100 million or beyond. And then if even if you're not doing a terribly great job investing some chunk or chunks of that money, even if you're like a really, really high income earner and you're just riding the S&P 500 wave over the next couple decades, and you're like, and your lifestyle hasn't
You're
materially
still
adjusted.
compounding that wealth. So yeah.
You wake up near, like, if you or I sold a company for you know $50 and
Let's do
then
that,
that's
Michael. Let's do that.
which we
That's a
should
great
do, which we should
idea.
do.
Yeah, we should.
And that it sounds kind of crazy. I mean, I'm
Yeah.
not trying to like, lessen all the hard work and stuff that goes into this, but like you can kind of see how people like kind of wake up one day and are like, "Oh shit, I'm worth like quite a lot of money now." And it's gotten more complex, or there's other,
Yep.
now
What do
our
you want to
kids
do
have
with it? I
kids
mean,
and
that's
there's
the
all this
question I
stuff.
always ask.
And
Like, what do you
yeah,
want to do with it? Like,
yeah,
you're at a point, we're at a point in our society evolution where they have choices they can make to do something really good with it, if that's what they're
yeah,
into.
yeah,
And more than we ever saw in the history of humankind, right? Able to do this now more than we ever could before. And it is fascinating because you're right. We're not talking about the uber billionaires. Yeah, we know they're doing stuff with it. We're talking about these centimillionaires or down lower that are like, hey, we can actually make an impact too. And I think that's intriguing. I think that over the next 5 years gets insightful.
yeah. I think so. There'll be some chunk of that huge group is going to decide, I I want a single family office, even if it's those couple
Mhm.
people, even if they aren't even acknowledging it or calling it that, like they're
Yeah.
gonna effectively create one. And then I think another like sort of prediction thing is that a lot of people are going to they're gonna want to increasingly approach it in the most like professional and sophisticated way, but they are going to more of them are gonna do a better job, probably with the help of others acknowledging that they don't have the scale necessarily to do some of the things that they want to do. And so
That's
there's
when
going
you
to
send
be,
them my way, man. Just send them my way.
yeah,
We'll take care of them.
yeah. And there's going to be more multifamily offices though. So I
Yeah.
think that they'll be,
Okay.
and not like a wealth manager that's like providing some of these akin services and is like
Right.
a collaboration. I think in this moment, at least, the definition I'm using is like the
Yeah.
the multifamily office that's just like a handful of uber wealthy people that have pooled together their resources. They aren't
Yes.
necessarily out there trying to like drum up new business
Yeah,
and
no,
get
no,
other
I agree.
families.
I think that's
Yeah,
the version that I agree with that. I completely agree with that. And we should measure it because I think you're dead right. I think that's the version of multifamily office that we see emerge. I totally agree with you on that.
yeah. So that's I don't know. Those are some of my
I like
I guess,
that.
predictions. Yeah.
Okay, well, we'll go with it. And we're getting to the end here, so let's wrap it up. I like to ask one thing at the end here. What are you reading right now? I'm sure you read a lot because you're a journalist. I just got to assume that you're into that. But what are you reading right now?
Oh man. You know, the last couple months I've just been like devouring anything family office related, just because I'm focused on this now. I want to
Yeah.
stay as informed as possible. I'm like mining for ideas. I'm sort of, I mean, I like to think I put a lot of thought and energy into planning and launching Modus, but like it
Cool.
also is a brand new company and needs to evolve and
Yeah,
can be
you're in the
reshaped as
early
necessary. So I'm like,
stages. It's
yeah,
gonna,
looking for
right.
ideas and whatever. So that's what I've spent a lot of time doing in terms of
Okay.
reading. But I still I haven't done this at Modus yet, but my aspiration is for Modus to ultimately my ambition is for it to be a larger news organization with
Right.
other journalists, and for it to, I think newsletters will be a important part of that for certainly the near and probably middle future, if not beyond.
But not
But
the only
my
medium. Right.
but not the only medium. Like, you know, I can't write a 5,000 word profile of a person and put it in an email. No one's gonna read that. Right.
Yeah, that's
That
no,
has to be,
I don't
but
like.
the email, this is the coolest thing about email. I'm talking about it like it was like invented yesterday, which obviously it's not. But like,
No, no.
this is the coolest thing about email is like it can do what it needs to do. It's just the vehicle for whatever the thing is. So if it's like a few hundred words about like who you should call or someone who helps you purchase a $95,000 Super Bowl ticket and experience,
I saw that
like,
on your newsletter. I saw
yeah,
that.
like it, like, you know, like if you want to write a few hundred words about that, like the email is a good place for that. But if you want to write 3,000 words about that or something else, then that needs to live in another place. And then the newsletter is a thing that sort of drives people and helps
Right.
that be a little more
I like that.
discoverable for the person that's interested in that. So I I've written stories, I've written long stories like that, and it's still some of my favorite stuff to sink my teeth into. And I still read GQ cover to cover, and I read a lot of the New Yorker, and like those kinds of things. I specifically seek out something that is really long, and I don't know. I'm trying to stay sharp as I look for the first opportunity to do that at Modus.
I love this. All right, man. I'm just excited to see where this journey goes for you. You know, we're big fans of you here at Armanino. We're gonna be standing by you the whole way. We love what you're doing. I love what you're doing. So I just want to thank you for joining me here today. I think this was fun, and you're getting to talk more about this new venture. And we're already seeing it work out there. And I've, you know, I'm just excited where 2025 will take you this year, Michael. It's gonna be fun to watch.
Yeah, thanks so much for having me. It really is. I feel fortunate to do it, and like it's a pleasure. Just, I don't know, talking about
Yeah.
Modus,
And plus, you have a
spreading the
great
word about
haircut. I mean, I'm just biased, but you have
it. Yeah.
so awesome. Well, thank you for joining today, Michael.